Welcome to Advanced Trading. We're going to dive into the September quarterly stocks report here. I'm joined by Brian Basting and Michael Reginelli. A little bit of a surprise today, Michael, in the corn number. Slightly below the average trade guess, right? A September stocks or ending stocks for 23-24 at 176, 85 million bushel below. What do we see the USDA do to back into that number?
So, yeah, main thing, like you said, 85, 86 million below the average trade guess. I think that's what got the market's attention. There might have been some cues of this as we saw, carry in tighten in previous WASDE reports. The biggest thing was June, July, August disappearance. If you dig into the feed residual side, demand was up quite a bit compared to a year ago, 3.2 billion bushels versus 2.7 year ago. So tighter than last year, but you got to remember too, like stocks on hand for corn are still up 28, 29% from what we saw a year ago, where the pipeline was fairly empty coming into harvest. So a lot of the bushels still being held on the farm based on today's numbers. But in general, the situation is still more comfortable than it was a year ago. So we've had a 40-cent rally in futures at this point in about a month's time. We got a big crop coming at us. I know we missed expectations today. Pipeline is a little more full than what we had a year ago. I think with next week's report, a lot of the emphasis is going to be on acres. So we'll get the FSA survey data. There's some indications harvested acres could drop a little bit. We've seen that in prior reports, or at least indications. The survey data is really what's going to tell us. What this really does, I think, though, whereas the bullish, we saw a bullish reaction today. Missed trade,
up 6 or 7 across,
up 6 or 7. Pretty sustained rally the last 30 days. Missed trade estimates. The one big thing, though, is what we are doing is we're reducing the ability to see yield attrition here this fall. We saw an uptick, half a bushel up in the September WASDE report. Yield went up. It's pretty rare that they do a yield increase in September just to turn around and drop it in October. They'll probably want more anecdotal data historically. They'll probably want more real-time data before they actually make a sweeping change and work it back the other way. But we have less of a buffer than what we thought we had 2 months ago based on today's data.
Yeah.
So where the yield ultimately comes in just becomes that much more important as we try to dial this in.
Right, as we navigate kind of through our harvest, which we're just getting started on, and focus on the South American production and kind of the ins and outs of our S&Ds.
Yep.
On the stocks number for beans, 342, again, slightly below where the average trade guess was. Kind of similar commentary, right? We saw a little lower harvested acres on beans for last year's crop, and backing into it. Still felt comfortable. Beans were down 9 here at the settlement.
Yeah.
Feel like harvest progress on beans maybe weighing into that a little bit, and a big crop coming.
Yeah, I think so. I mean, whereas, we noted the corn rally. I mean, beans are up, I don't know, 80 to 90 cents, depending on where you want to draw the number.
Impressive run here, yeah.
It's been a pretty good run, for a market that's staring down the barrel of a 500 million bushel carryout on paper today. That's pretty good pre-harvest run when we got some activity going. So it wasn't as dramatic. We missed trade estimates slightly below it. It wasn't the swing and the miss that corn experienced. I think it was more of a neutral report on beans as we kind of look forward here.
Yeah.
It's still going to be somewhat yield dependent. It maybe doesn't feel like that's as threatened at the moment as corn. Not that corn's terribly threatened, but you got a really big number on corn. Typically, if you're going to see a variance, the corn number could move more, I would think.
Pretty good cushion too on beans. I mean, half a billion bushel plus carry out, while we could debate maybe some plus or minus a bushel in the yields on either corn and beans. It feels like we're getting into that growth of carry out year over year on the beans, where the corn, while there's growth, I think there's still more variables in play with South America, but that bean number could be kind of that. It's hard to stomach that $500 million, right?
Yeah.
You got to be pretty competitive in a world market to take away from South America.
It's a number we haven't seen in at least 5 years or so, right? Or more. So, but, and the other thing too, though, is on the Sep 1 bean stocks number, growers do own a higher percentage of it on beans than corn. I don't know if that was well documented today, but, by at least 5-6%, I think, as the total of on farm.
Yeah, some interesting regionality to that too, not to interrupt, but you can see, not to dive into it too much in the regionality, but where we've got some of these processor build outs, some new Western soybean processing coming online, definitely a few more pockets where the farmer was holding some beans, maybe to bridge that gap, feel comfortable that the production's there. but a big harvest week open ahead. And you both have kind of made a point earlier talking the rally we've seen. And whether we see continued dryness in South America, just feels like we're wide open here for harvest in the U.S. Illinois West, especially East, is coming online after some rains, but not much downtime. It looks pretty open here.
Yep.
We've seen this board rally on corn and beans. What do you guys think the producer should be looking at here as he gets in the field? Areas realizing record yields, some well above APH, Missouri, pockets of pick a state. We've heard some really good yields.
Yep.
Haven't heard a lot of the disappointing. Producers maybe look at selling across the scale, re-owning it, still pretty low volatility. What are you guys advising producers on today?
I can go. Yes to everything you just said. It's based on where the fundamentals were in August. It took several things to line up to prompt this rally, and that's not to say we can't see things continue to change and keep it going. Where we were talking a month and a half, 2 months ago about how undersold the USDA export program was, we've caught up in fairly short order here.
Yep.
Corn export sales, especially to Mexico, but really corn export sales as a book are very strong today. You might ask why that is. Well, there's some global issues, in Ukraine, there's issues in the EU, potential issues in Argentina. Some of the major competitors that we would be up against, are seeing some issues. But more importantly than that, we had really cheap prices. So like when you're going to beat the market down and prices get cheap, low prices cure low prices, the old adage people have thrown around for decades. There's some merit to it though. We've been able to unearth some demand, and that's what was needed when you beat prices down and you say, hey, we are loaded on supply. We need to find homes for products. Some of that may be materializing and in real time here. So it's a long way of saying what I'd be looking at is capitalize on. It's not to say that there can't be extended rallies as we move forward through the curve here. There's narratives you can build, but we've seen a pretty healthy rally on at a perfect time that we usually don't see it. It's pretty rare in September, early October that you're going to get a pop in futures like we just saw from a percentage standpoint. So I would be taking advantage of it. I would be selling it. I'd be protecting downside at this point forward, especially if you're undersold. And volatility is still cheap even after the recent pop. I feel like we say it all the time, but it can be cheaper to go buy a call or buy a call spread than whatever service charges or storage charges are going to be at the elevator. And that puts you in control because now you're protecting your downside, you're reapplying that equity, and you're staying in the market to maximize upside opportunity if something changes here.
Yeah. This, the kind of the marketing year behind us now, that's, I feel like the message there is a good one of, it's not a, hey, what you did wrong last year. It's not a negative focus, but we saw continued on-farm grain stocks, corn and beans hold. We knew the producer was a holder through the year as prices deteriorated most of the marketing year, and we didn't get those weather rallies. We didn't get
right.
So it's not to say we can't see global production changes, but the timing of the producer getting in the field, realizing some of these yields, still seeing some of these high regional on-farm stocks, just high stocks in general versus last year.
Right.
We got to dig ourselves out of it. And so we're seeing this price rally, but with low volatility, I think I looked, you can still go buy like a July, even if you wanted to buy $1 window or something and for pretty cheap to give yourself some upside, get through this U.S. crop that may get bigger.
Right.
And be able to take advantage of any movement from a South American short-term weather scare or long-term production. We don't know what that's going to be.
Yeah.
But take advantage of some of these rallies we've seen. Shift away from corn and beans maybe for a minute.
I just add one more thing, Nate, and I think that Michael did a terrific job of summarizing when you're looking at the timing of this rally. It was unanticipated. We really were 30 days ago, we were looking at sub $10 November soybean futures and looking at cash prices well below $9.50 and pushing $9 probably in some areas. So I think the key thing from a producer standpoint is get control of these bushels. You guys highlighted one direct way of doing that would be a GMP contract. Get those bushels sold across the scale, tack on a call option to it. Nate, you did a terrific job there a moment ago. How far out you want to go is a matter of individual preference, but definitely I would want to go out at least into the March or May, maybe beyond at this point, but getting control. And by that, I mean, getting a floor underneath the market, but leaving that upside open because we just started this crop year. There's so many twists and turns yet. We don't know what's going to happen. But getting control, maybe in some cases, buying a put underneath the market would be a way to go.
Yep.
Because there is good carry out there, as you guys can talk about from the merchandising standpoint. But regardless, it's getting some type of flow underneath the market, corn and beans, and leaving that upside open. And again, 30 days ago, if you'd have told us we'd have been $1 higher on beans and I don't know, 25, 35 cents higher in corn, we just said we took that in a heartbeat. But just a matter of getting something in your hands, getting control of the market, and then let the market do the work after that.
Yeah. Sometimes it takes that realization of the combine's rolling, the yields are big, to just enough. And I think that's one of the key, we've all said it, the timing of this rally. Don't be complacent on, okay, we're changing the narrative. There's production concerns. There's pockets, but we continue to prove this crop, and kind of the carry in still comfortable despite it being smaller. But away from corn and beans, maybe to the small grains, focus on wheat here. Chicago SRW up 3.5, HRW hard red winter up about 7, and spring wheat up 11. What do we see for changes kind of by class on the wheat balance sheets?
They tweaked the hard red winter crop down a bit, Nate, compared to what it was there in August. August was our last comprehensive crop report for wheat, and they took the crop down in Kansas, Montana, and Colorado relative to August. Of course, again, those crops are long ago tucked away in one way or another here. But HRW is down a bit, SRW unchanged from what it was in August. And white wheat, though, was down a bit. So overall, winter wheat was down just a touch from what it was there in August. The changes there are interesting from the class standpoint, though, Nate. In the spring wheat, looking at hard red spring, they increased the yield in North Dakota by 3 bushels per acre. They increased the yield by 1.5 bushels in Minnesota, but they cut the yield in Montana by 7 bushel. So the net was only about a 4 million bushel increase in HRS production. So from a production standpoint, I would say that all in all, when the dust settled, kind of neutral.
Yeah.
But it's interesting to look at those breakdowns because, as you know, being on the tour that you conducted earlier this summer, terrific yield potential in North Dakota was realized. But just to the west, the neighbors to the west suffered in Montana. So every year is different.
Yeah. Record North Dakota, record Minnesota spring wheat yields. So all wheat stocks, a pretty comfortable number compared to the last couple of years, which have been pretty steady for that September kind of harvest behind us for the most part. What are we watching now from a global balance sheet, upcoming reports, kind of weather? We're pretty optimistic of some demand in our balance sheets this year. We've got some decent export shipments and sales on the books year to date. So what's our next key kind of regional production and maybe wheat outlook against, some of the prices? Sell into these rallies, continue to manage risk. What are you thinking on a kind of a global picture for production?
It was interesting, Nate, because when I looked at the breakdown of stocks by region, Northern Plains, Central Plains, Southern Plains, Midwest, Eastern Corn Belt, where the case may be, 2 areas stood out, but one area in particular, the Northern Plains, the implied disappearance during June, July, August of HRS was almost 24% higher than last year. Now, is there some noise in that number with the harvest in terms of grain in transit? We won't know for a while. But for the moment, HRS, I should say Minneapolis, MGEX was stronger today, reflecting that disappearance was higher. So maybe in next week's WASDE, we'll get a little bit more disappearance of HRS relative to HRW and SRW. But having said all that, implied feed disappearance during June, July, August was just a hair above last year, 252 versus 248, pending final numbers. But back to your question, we're going to be watching the exports. I think seasonally decline here, Nate. Sales have tailed off here the last few weeks. Shipments had another decent week today, but there's a strong seasonal pattern as the corn and soybean program really kick in. Wheat takes a back seat. Wheat had a nice little run here for about 6 weeks, though, of shipments and sales for that matter. I think that ship is we've gone about as far as we can on that. Having said that, I think now we're watching what this drought in Argentina, critical month here coming up in October. It is dry. They need rain or this crop is going to come down. I think it's going to come down in next week's report a little bit. Australia had a frost here recently on some of their crop, particularly in the east and the south.
That's supposed to be one of the only bright spots, Brian.
Well, I think that number could come down. So from a U.S. producer, bringing it back to your question, Nate, is that we've had a bit of a rally in wheat, nothing to hoot and holler about, as it were, but still some rally, some strength. If you're still holding old crop, get control. The message is the same for a producer. If you're looking at 26, 25, maybe even the crop insurance price has been set. It's down from the last couple of years, but at least you have that benchmark to look at now. But I think as far as the October WASDE, I think the market will be looking at Australia, Argentina. And I think we're gonna take our carry out just down a smidgen with that implied feed usage a little bit stronger than expected this summer. But I think wheat in some ways, Nate, is going to be a follower here after we get our arms around Argentina and Australia in particular. It's going to be a follower of corn in particular. So I think we just had a little bit of a rally here, but you guys did a great job earlier. The carry out is going the direction it's going higher.
Yeah.
It feels
a little bit more of everything.
A little bit more of everything, Nate. So I think that's something to keep in mind strategy wise.
Sounds good. Yeah. Michael, shift maybe a little merchandising. Not a eye-opening risk in the carry-out stocks, right? It wasn't a surprise. Oh, we're sub 1.3.
Sure.
So we've got a little less carry in for this crop year. Very early harvest. Production feels there. Do you think there's any changes maybe in the basis spread outlook when you talk about tighter stocks, or maybe some of the ongoing concerns as we see demand develop and some pretty good key early indicators that we're a little more optimistic on corn demand specifically?
Yeah, there's a lot of ways you can take it, and unfortunately, there's a lot we don't know today. But to your point, I was telling somebody here just before we walked in, we are tighter on paper. That's what's going to get the headlines. But tighter on paper is just basing it off of what the trade thought we were going to have today, right? Like the reality of it is, the SEP1 stocks today are still the highest for corn and beans that we've seen since 2020, as far as like raw numbers go. We're tighter than expected. Good little pop in the market, great. But the reality is we still had more corn and we still had more soybeans in commercial bins and on farm bins combined than we've seen in 5 years. So that is a nice buffer when you're coming into what is expected to be a big crop, right? And record yields. We can argue on the corn yield or the bean yield at this point. None of them are baked in and guaranteed just yet, but they're expected to be big. Crop ratings would suggest that it's going to be a big crop, and so a few different things. Bigger carry in, right? Expecting a big crop here. Just had a nice little run on prices. Hard to say what the U.S. farmer is going to do here this fall. Tight holder all year last year. Maybe this rally and just the marketing cycle of how it performed last year encourages a little more selling early on to take advantage of, a rally opportunity if it's being viewed that way. We could free that up, but that's still going to be a question that's got to be answered over the next, 6+ weeks on what that looks like. How demand develops here going forward is obviously going to be critical and key. I think at the end of the day, if you look at the amount of stocks available on SEP1 tributary to the river, though, when you look at Illinois, when you look at Missouri, when you look at Wisconsin, when you look at Minnesota and on down, there's a lot of bushels that are expected to be available from a supply side. So even if exports do increase, in theory, on paper at least, assuming a normal cadence of farmer selling here this fall, we should have an adequate amount of supply to meet that demand. We also have some other logistics issues pending at the moment in terms of embargoes, in terms of strikes that we're going to have to sort through. If any of those things take hold and start disrupting the flow of grain, all that does is complicate flows even more. That's not a bullish basis statement by any stretch if supplies start getting backed up and elevators are having trouble turning space. So, we hope we don't get there, but there are more than one, outstanding thing lingering at the moment that we need some clarity on. Maybe learn a little more on it tomorrow. But.
Yeah, it feels like there's enough cushion to kind of navigate the front end of it. The uncertainty gets pushed a little to the back end.
Right.
Pending a board move, if it continues to stay at these levels of rally, we're getting early ownership. At least it feels like that today is the indicator.
Right.
But I do think, from a corn and bean spread statement, from a commercial side, it's still probably exercising some patience here on the front end. Allow us to get into harvest a little bit more.
Yeah.
And then watch some of those deferred numbers.
Right.
Classic against any deferred sales. If you're seeing some opportunity to sell carry, and even in the producer's mind, we said, puts. If you're putting it in the bin, there's good carry. Don't let that slip away and let the flat price environment continue to deteriorate if we prove some of these South American crops. And maybe as a final, just not report today, but we've talked a lot about the rally report behind us. It gave us maybe a little bit of support, a little mixed on the bean side, but the South American weather, what are we watching here for soybean planting, early corn planting? Are they catching some rains, pushing the rains back a little bit? What's the latest weather update?
The entire Brazilian soybean area, Nate, is not bone dry. I want to emphasize that. Just had a good report this morning saying that about 30% of the Brazilian beans have had good rain. Now, that's mostly in the south.
Okay.
Rio Grande do Sul, Paraná, Mato Grosso do Sul, some of those southern states, which are important in the scheme of things. But 30% of the beans in Brazil have had good rain. Now, what's caught the market's attention is up in the north, central and north. Mato Grosso has been dry.
Right.
But I'd remind the viewers that really it's very early in the planting season.
Yeah.
If this was 30 days from today, if this was a Halloween instead of September 30th, and we were looking at some bone dry conditions, the market's going to get very interesting. But they are saying around mid-month, there's some fronts moving in from the northwest in Mato Grosso that will cover those big growing areas, very important growing areas, and producers are ready to go. It's just a matter of getting that little bit of moisture in the soil,
to give you that confidence.
just like the U.S. producer, Nate. You just said it spot on. Just to give you that confidence is get that drill out, get going, and really motivate the producer. Keep in mind this too, Nate. Not only is the U.S. producer benefiting from this rally, but it also at least gives the Brazilian farmer some hope of getting those beans in the ground. That there's some reason. So I think that probably intended acres now will get planted, weather permitting, in Brazil. It's a weather market, Nate.
Yeah.
But we don't want to give the impression that this is August 1st and the crop is pod set and pod filled. They're planting.
Yeah.
It's not.
Right.
It's not.
Right.
It's important if it was 30 days from now and when we're looking at this dryness. But most weather forecasters for the moment, Nate, around mid-month, and that will cover Mato Grosso. One area to keep an eye on that doesn't get a lot of attention is the states to the east of Mato Grosso, and those are Mato Piba, and that's 4 states together. That accounts for about 14% of Brazilian production. That area has been dry, and it is not forecast to get as much rain as Mato Grosso to the west.
Okay.
So we'll see, but it's a weather market. From a producer standpoint, Nate, you want to be a student of the market. You want to avoid, just like a weather market here in July and August, avoid getting caught up in that and manage the market. Both of you guys have done a terrific job of talking about this rally is unexpected, demand considerations that Michael highlighted. Demand is coming back, and we've had some concern about Brazil. It's the bird in the hand worth 2 in the bush. Let's as you get off that combine, hope everybody has a safe harvest. And now let's get control of these bushels. Let's put a floor underneath it. And if Brazil does have a problem, then we'll have our position in place, either with puts or with the call option. If it doesn't, we'll have our position in place, either with a sale and a call option or a put option that guards the downside. But it's going to be an interesting time the next 45 days, Nate, but I just want to guard against getting over carried away at this point.
That eastern area is important to exports too, so that is something to note. But again, it's problem long perceived at the moment, right? If it was 30 to 45 days from now, we have a problem. We're trying to figure out what the pathway forward is. Right now, it's concerns about the perception of a potential problem, right? So we got a lot to learn,
right?
And we're set up well
pieces together
to be the residual supplier of grain here.
Right. We'll see the weather rally with the carry out, the SEP1 stocks, the numbers we just saw going into a anticipated good harvest. It's a very different marketing environment than a weather pattern starting in Brazil with a 200 million bushel US bean carry out. A lot of uncertainty ahead, but just manage what you can manage today. And like you said, Ryan, safe harvest. I think that wraps it up. Thanks for joining us, everybody. Don't forget to tune in 9 a.m. daily for our pro media, and join us on October 11th for the next USDA report. Thanks.